Hey, what's up guys? John here. What central banks all over the world are doing right now, literally over the last 12 hours, says everything about what the future of the dollar looks like and where this economy as a whole is going. Jerome Powell just increased interest rates, as everyone knows, 75 basis points yesterday, and we have another 50 basis point hike coming. But I believe what is very likely going to happen is we are going to start to see interest rates in this country skyrocket far above what we are currently looking at. I think what we are ultimately going to see is a de-dollarization at levels that many people cannot yet comprehend. But when you connect the dots and you pay close attention to what these other countries are doing right now, it is very, very clear. In this video, I'm going to walk you through exactly what that looks like. Please hit the like button. Hit the like button. YouTube's going to share this content to educate more people about what's really going on. Central banks are quietly buying gold at the fastest pace in 55 years. Central banks globally have been accumulating gold reserves at a furious pace. The last seen 55 years ago when the US dollar was still backed by gold. So what is that saying to you? We printed trillions and trillions of dollars over the last couple of years. 40% of all USD since 1776 has been printed in the last 30 months, give or take. So you start to look at what this is going to look like as the US really starts to leave that position of being a global superpower. Unfortunately, according to the World Gold Council, central banks bought a record almost 400 tons of gold, 399 tons, worth about $20 billion in the third quarter of 2022, with global demand for the precious metal back to pre-pandemic levels. Now, a lot of people are looking at the gold price saying, you know what, gold's not performing that well, and it is. It is actually performing pretty well in relation to, stocks and a lot of cryptocurrencies. However, the price is very deceiving because there is a premium. If you actually go buy gold, you'll see a completely different figure at the checkout than you will looking at it online. For example, a 30-ounce bar of gold, the premium is about $115 above list. So if it's right now $16.50, $16.75, you're probably going to go somewhere around $1,800 an ounce. So it's a big difference. Same with a lot of silver coins, a lot of precious metals. Retail demand by jewelers and buyers of gold bars and coins was also strong. The WGC said in the latest quarterly report, WGC said the world's gold demand amounted to 1,181 tons. In the September quarter, good for 28% year-on-year growth. WGC said among the largest buyers of central banks, now pay attention to this, Turkey, Uzbekistan, Qatar and India, all of which are in BRICs. The BRICs. So they are essentially, if you don't know what BRICs is, it's a collection of countries in which they want to use their own currency to strip away power and authority from the USD, the dollar being the reserve currency. They want to have a basket of reserve currencies. And when we look at what India and a lot of these countries offer, it's resources. They have production, they have the fossil fuels, they have a lot. We in America have lost a lot of authority over the last 75 years, unfortunately. And it looks like it's only going to continue at this rate. Like building BRICs, why Saudi Arabia, Egypt, and Turkey considering joining. And we look right here, Uzbekistan in cooperation with BRICs. This just came out just a couple days ago, or a couple months ago. And right here, this is where I see this whole thing going. So we look at Turkey's inflation rate, 24-year high, 85.5%. 85.5%. But what I think is very likely going to happen here is that we're going to see America continue to increase interest rates, and with that, we're going to see the cost to borrow money skyrocket. Credit card debt is going to get much, much more expensive to service. The same is going to be true with auto loans and personal loans and adjustable rate mortgages. And so what I believe is ultimately going to happen is there's going to be more and more demand for universal basic income and social services. And the only way to actually fund this is going to be through increased tax revenue. And so if they're going to increase taxes, ultimately what I believe is going to happen is we're going to start to see inflation continue to soar. And I believe that taxes are just going to cripple many small business owners. So I believe what we are going to start to see is people rush to a safe haven, whether it be through a Fed pivot or through the dollar being completely challenged and people looking for a safe place to put their money. Gold has been that for 5,000 plus years. I believe we are going to start to see a very big spike in the value of gold and silver over the next, I would bet we're going to see some type of big jump in the next 24 months. If I had to put a timeline on it, it'll probably be the next 24 months. We're going to start to see a really big jump in the gold price. They go on to say that though other central banks also bought a substantial amount of gold, They did not publicly report their purchases. The Central Bank of Turkey remains the largest reported gold buyer this year, adding 31 tons in Q3 to bring its total gold reserves to 489 tons. The Central Bank of Uzbekistan bought another 26 tons. Qatar Central Bank bought 15 tons. The Reserve Bank of India added 17 tons during the quarter, pushing its gold reserves to 785 tons. Now, I believe all investors should have some portion of their portfolio allocated to precious metals. It doesn't have to be a huge number, but 5%, 10%, put something in there just to have it. Because if things really do hit the fan, what are people going to look for as a store of value? Look at Turkey. When inflation took control, really started going out of control rather, about 12 months ago, people were buying iPhones, they were buying cell phones, they were buying all these different electronics because the electronics are actually a better store of value than their fiat currency. I believe what could happen is people are going to be racing for a store of value, something which they can hold and control. And what would that be? Is it going to be cell phones? Is it going to be a bunch of iPhones? I don't think so. I don't think it's going to be iPhones. I think it's going to be something else. I think it's probably going to be precious metals. I think we're going to see that continue to rise. Retail buyers in gold bars and coins also surged in Turkey to 46.8 tons in the quarter, up more than 300% year on year. These developments are hardly surprising, taking into account gold is still considered a preeminent safe haven in times of uncertainty or turmoil. Despite the emergence of cryptocurrencies like Bitcoin, gold is also regarded as an effective inflation hedge, though experts say that this only rings true only over extended timelines measured in decades or even centuries. I would disagree with that. If you look at all the uncertain timelines that we've seen over the last roughly 100 years, in the 1920s crash, when we left the gold standard in 1971, dot-com bubble, the 1987 stock crash, the real estate crash in 2008, 2009, people rush towards gold in a safe haven. Now, when we look at what's happening globally, we are stepping into these uncertain times, and I would be shocked if we basically just go back to 2019. I don't think that's ever going to happen. I think things are just going to get much, much, much more questionable, and people are going to get more defensive, and people are going to look for ways in which they can protect their wealth. They're going to look to protect their money, and they're going to want to do it in a way in which they have full control over. I would bet it's going to be precious metals. It's funny, 2 years ago, 3 years ago, I was not one that would talk about investing in precious metals or even invest myself in precious metals. Now, things have changed. Unfortunately, rising rates have spoiled the party for the gold bulls, with exchange-traded funds, ETFs storing bullion for investors becoming net sellers. Indeed, offloading bullion ETFs countered. Buying by central banks pushed gold prices down 8% in the third quarter. Gold is a non-interest-bearing asset, and investors tend to move their money into higher-yielding instruments during times of rising interest rates. An overly strong dollar has also been helping gold and commodity prices. Gold prices are down 9.3% year to date and nearly 20% below their March peak of $2,050 per troy ounce. Now, yeah, sure, I agree with that. Gold is something you have to pay to store if you don't hold it yourself. It's not going to produce any net revenue. It's not like buying a treasury or buying a multifamily real estate deal. But when we're looking at treasuries, we're looking at, let's say, for example, this real estate. Let's say you're going to go buy a real estate deal. When we're looking nationwide, we're seeing rents starting to fall. If you just simply, whichever market you are in, if you Google your market, or if you just Google national rents going down or declining, you'll start to see all of the data, all the charts, all the facts that rents are in fact going down. Now, if you have a situation where rents are, going down, they're cooling, and we are starting to see mortgage rates continue to rise, we're seeing insurance going up and property taxes going up, everything's increasing, what you're going to likely see is the safe haven that was real estate is no longer. And I think that could become a real big opportunity in the next couple of years, maybe the next year, next 2 years in real estate. For right now, it's not the safe haven. I believe the safe haven is going to be gold. What do you think about this entire situation? I'm betting on a Fed pivot. I'm not saying it's going to happen now, but I think it will happen in the next 2 years. And when that does happen, gold is probably going to be shooting up. What do you think? Drop it below, hit the like button, subscribe. You're also subscribe on my second channel. It's an interactive call-in show and a podcast. I'm interviewing a lot of different people in personal finance and the real estate industry. If you need help fixing your credit, we would love to help fix your credit at CashNow.Video. Feel free to call us at 561-430-5900. That's 561-430-5900. 5900. Subscribe here and my second channel, and LinkedIn, Twitter, Instagram, and TikTok up in the banner, and I'll catch you guys in the next video.